Welcome to the Transparent FX Academy. In this video, I will show you how you're supposed to be analyzing the market. And this is very important to develop your own trading plan and trading strategy. And the best way to show you is to perform an actual analysis, which is exactly what we will be doing in this video. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms every day. So if you want more free education and analysis, make sure you subscribe and I will see you in the video. Okay, so what I will be doing in this video is, first of all, giving you an update on the situation that we have on EURUSD, and then what we will be doing is also performing a full breakdown of the GBPCHF, which is a very interesting pair to follow at the moment for a capitalizing opportunity. So let's start our video from giving an update on the situation that we have on EURUSD. Now, if you remember, what did we say on EURUSD? Starting from our first analysis when the market was here, we said after this W formation, we want to see the market make a move to the downside and complete the pattern at the neckline. After that, the market completed the impulse correction and impulse pattern to the upside with an overextension. And then what did we say? We said we want to see the market create a higher high, stop hunt all the stop losses that are above this area, which is exactly what the market did. And then we want to see a deeper retracement, which is what the market did. I will link those analysis in description. Specifically, what we wanted to see was to see the market make a move to the downside to the 0.382 of the Fibonacci taken on the impulse. Why? Because if you have an impulse in the market, okay, like the one that we have here, so an impulse from the low to the high, and you want informations on the retracement from that impulse, what you're supposed to be doing is taking your Fibonacci from the low to the high of that impulse. And we had identified a downside target, which was the 0.382, because it was the Fibonacci level lining up better with structure. In fact, we had this weekly previous resistance, now turned support at this level, which the market had respected. So we basically had this level as our downside target, which the market did hit. And if you capitalized on the move to the downside, good job. Then what did we say again? We said the market on the weekly has an impulse, a correction, and we would like to see the continuation to the upside. And on the daily time frame, what did we say with our previous analysis on this pair? We said from here we have a market that has a left shoulder, a head, and we want to see the market create a right shoulder inside of this area and start the move to the upside. So what did we say? We said inside of this area, we will be looking for possible capitalizing opportunities to the upside if we will see proper confirmations on the 4-hour time frame. However, what is going on from a 4-hour perspective? On the 4-hour, the market is just creating only bearish patterns, starting from the W formation that the market created here before the move to the downside, following from to the basically impulse correction and impulse pattern to the downside the market is currently creating and completing. So all the structure at the moment of the market is to the downside, and we can't be looking for any longing opportunity until the market will remain like this. So at the moment we can't be looking for any longs on EURUSD, and we haven't taken any long on EURUSD with students because obviously structure at the moment is too bearish to be even considering a longing opportunity on it. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, if we check the Co2 data, so what we have from a institutional perspective on the EURUSD, what we can see that currently we're sitting with 118k net positions, so way more longs than shorts. However, we have 190k longs, which is the highest level that we had in quite some time, and we can expect some profit taking from all these longs. Okay, very, very important. So that is why we always must be reactive in the market and not predictive. Just because we want to see the market move to the upside, we can't just take the long. We have to wait for proper confirmations on the 4 hours, which the market might still give us. If we will see a perfect, proper rejection from a 4-hour perspective, then yes, we can possibly be looking for longs. But at the moment, given the very strong bearish pressure, it seems like we won't have that. Now, if we go and see on the other side, since EURUSD is not a very interesting pair at the moment to follow, if we go and see what we have on GBPCHF, what kind of situation we have. By the way, on the GBP pairs, if you remember, we were running the short on GBP/USD with students, which just hit our downside target yesterday for a beautiful 1 to 3 risk to reward to the downside. But let's perform a full breakdown of GBPCHF because it's starting to become a very interesting pair to follow. Now, from a monthly perspective, let's do a complete top down from the monthly to the 4 hours. Now, from the monthly time frame, what we can see on the monthly, we can see that the market is approaching a very strong demand area. It was very strong support here, again turned strong support here, again support, and now the market is approaching again this very strong demand area, from which we can expect, after possibly some manipulations to the downside, a rejection to the upside. So to find some buying pressure inside of this zone. If we go down on the weekly time frame, what we can see. Now on the weekly time frame, we can see that at the moment, in creating this leg to the downside, the market is forming an M formation. Now, if the market will form this M formation, then we definitely expect the market to make a move to the upside to complete the pattern at the neckline, aka the previous support, that will be then turned resistance, which will be our upside target for the wave to the upside, because we will have an M formation testing a very strong demand area from a monthly perspective, creating a perfect confluence, which gives us a very high probability that at that point the market will actually complete the pattern at the neckline. Let's go down on the daily time frame and see what kind of situation we currently have from a daily perspective. Now on the daily time frame, is pretty clear where is the demand, okay, where is the support. In fact, in all of this impulse to the upside, there is one candle which is not related to the move to the upside, which is this red candle here, which acts as very strong support if the market will actually go and test this demand. So what would be the best situation for a possible trading opportunity on GBPCHF? If the market will actually manage to remain bearish all the way down to this level, then here we have a perfect zone for a very high probability longing situation back to the neckline to complete the monthly pattern and to complete the weekly pattern, so the weekly M formation, and reject the monthly support. So how we will be approaching this kind of situation? Now, we don't know if the market will start the wave to the upside exactly inside of this area, but what we do know is that at the moment on the 4 hours, everything is still bearish, and until everything will remain bearish, we will not be looking for any longing opportunity. But as usual, we will be reactive and not predictive. We will be following this move to the downside with students, and no matter where the market will actually shift from a bearish market to a bullish market, until we have a 1 to 3 risk to reward to the upside, we will be taking the trade. Now, the more the market will go down, the better it will be. But the way in which we will be approaching this with students is like this. We will be monitoring price action on the 4 hours inside of this area, waiting for the market to shift from a bearish market to a bullish market. And as soon as the market will shift from a bearish market to a bullish market and provide to us one of our valid entries, we will be taking a nice long with a beautiful risk to reward to the upside, minimum 1 to 3, but the more it will go down, the better risk to reward it will provide for a nice capitalizing opportunity to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you the market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. Link is in description, or I will see you in the next video.